Hope everyone's having a great weekend. Um, this is Rose, and I wanted to give you an outlook on perhaps what to expect this weekend. Overall, we're in a range section. We're within a range of another range of another range. So we've been in consolidation for a long time, since October, kind of to be exact, and it's kind of driving people mad a little. But overall, patience will pay once we get out of this consolidation. We just closed the second month of the year. From a quarterly perspective, the quarter is still open. We still have another month, but we've been stuck in this range with wicks up and down. Something to note, we do have a new 2 month opening, and we closed 212. So it'll be interesting to see. This was kind of like a failed two up because we went above this candle and then we failed to close screen on it. And if we're looking at a bigger range, it would be interesting to see what consolidate, what happens. Do we come back down or we push back up? On the monthly, on red month, another wick. We've been wicking a lot on the month. So that I know that's been frustrating. And as you can see, the bodies are really small. So kind of just trading in a box. And then on the weekly, we are still in this nasty compression with a lot of wicks. And as you can see here, we close the week kind of red as well. So basically, we're in full time frame continuity, meaning that the year, the quarter, the month, the week, and the day are below their previous open. So far, it favors, like a bearish sentiment, but we're still in the range, so anything can happen. Of course, with the overall political news that we had, this geopolitical issues that we had this weekend, we expect a gap down. The levels that you should really be focusing on are basically what happens if we do lose this level right here, which is 67.75. Every time we've kind of tapped into it, we kind of push back up, as you can see here. Let's pretty sure that we're going to open somewhere in this broadening formation, but then we do have this other one right here that, let's see, do we kind of tap into it here and maybe push back up to keep us in the range? Or do we finally break below it and kind of start to capture some of these, do we start to come back down and maybe finally kind of come and grab these lows over here? So if we do start getting really bearish, I would look at this daily imbalance here, which is around that 6,700. That's going to be a key level if we start to really push down. And then if that doesn't hold, then maybe look to see if we take a previous quarter low over here at 65.82. And then, because that's the bigger box, like the bigger broadening formation that we have. Because if we do come down here and then start to push up, then that keeps us back in this overall big range and kind of pushes us up to maybe go towards all-time highs. But if not, if we start to, let's say, get really aggressive on a move down, I would look for something like this where you push down, grab some liquidity here, and then see if either it retests and then pushes down, or if it just moves back up. And then the other scenario would be if we do start to defend these levels here in the big range we're in and we start to push up, look for the same levels that we've been testing a lot, which is like 68.28, over here 60, 69, 60, 70 area, and then the one level that we've always been rejecting, 70.11, and then maybe even if we could make all-time highs and touch the top of this broadening formation and then maybe come back down. These are all the scenarios that can happen this week. I myself day trade, so I look at it day by day. I just try to look at the bigger picture to see what are those big levels on that can make a magnet, for price. So what are these big liquidity sweeps and all that the market can try to retest and see what happens there. And if you start seeing aggressive moves, then you can say, okay, now this is trying to get out of this compression. For example, on the 12-hour, you can see that we've been having all these inside and outside candles, and you see that a lot when you're in compression. So I don't fully trust them, because when it's in compression, it just kind of can bring you back down, and that's kind of like what happened here. We had a 313 and then 2 2s that pushed us up, but then brought us back down, and now we have a 1-3-1-2, and we could continue to do that. Once you start seeing like inside outside candles, fell to ups or shooters at the top over here, then that gives me more confident of like, hey, this might be a bigger move to the downside than having it in the middle of the range. Same here, if we start to push down and then we start seeing like 1-3s or 3-1s or hammers, then that gives you more confidence that, hey, we might be moving back to the top. Overall, I feel like this range has been lucrative for day traders and scalpers. And I know swing traders might struggle a bit based on the fact that we just keep moving up and down. So I like I said, I would look at all of this on Monday. I didn't swing anything, so I'm just gonna wait for sure the first 30 minutes, let that high IV, that high volatility die off, let people either take profit or, before I make my move, because a lot of times if you just FOMO into the open, you can really get burned really quick. So yeah, keep those levels in mind. Overall, because we're in full time frame continuity to the downside, I would like to see something like where we open with a gap down and then we fill the gap and then come back down. Because now, as we keep moving, lower, those big opens, like the yearly open, which is 69.02, can start to become a further target, and then so it might give us some more downward movement, and then eventually finally break this with aggression where we come back down, and that makes it a good opportunity to buy, maybe buy stocks for the long term or get into leaps as we start to that volatility starts to die down. Because right now with VIX is stuck in this channel over here, and I know a lot of people say like it's useless to chart VIX, but I feel like anything is chartable, and all VIX might not be as reliable when it comes to TA, but overall, if you can read the chart, then it can tell you where it's going next. Or at least you can set targets, because I know one thing with VIX, it really likes to fill gaps, but also I want to see it tap into here at 2310, and then eventually if it really starts to creep back up, watch it at the top of this channel, and then watch it meet other targets like let's see, like previously right here, it's always had an issue staying above 25.56, But if it starts to watch it come back and test 28.16, and then if we aggressively push back up like what we saw when in April, and you start seeing it go above 50, like then it's almost time to it's gonna start coming back down. So keep an eye on that as you're making your daily plans. Anything can happen, of course, with VIX, but it's always good. Anything above like 16, it just gets harder to swing. So be careful with your swings. Um, if we continue to push stay above the 20s, and especially in those higher teens. From an NQ perspective, and I want to give shout out to ADIX for pointing this out on Friday, but it's double inside, and for me, that's one of my favorite time frames because it's telling you it's been compressed a lot, and it's eventually, if it gets out of that compression, it might be aggressive. So this is the 2 month. So basically, for the last 4 months, we've been inside of this big candle. So what do? You can mark these levels and then see when it starts to break out, because if it starts coming down, it can easily come back down to this area, even like 2100 before it pushes back up. So keep that in mind. I know everyone's a little bit annoyed. I won't lie that I don't feel kind of annoyed about this whole compression, but right now I'm taking it day by day and seeing how, right now we're even tighter than we were in other months. So we might start seeing those catalysts, whether it's war, any AI or anything related. Let's see what the market wants to use as a catalyst to push us either, give us that big move. But I think patience will pay, not trying to anticipate it and instead trying to react to it. So yeah, so far that's my outlook for next week. I favor the downside just because, like I said, we're in that full time frame continuity, and I would like the bottom of this range to keep being tested. NQ looks weaker. Look for NQ to lead. If it starts to keep weakening, then that kind of tells you that ES might lead. But overall, yeah, I'm definitely looking to see how we react, to see if ES breaks 6775, then I think we do get an aggressive move down to at least retest 6700, or even 6650 in all those areas. So definitely keep an eye on all these levels and just take it day by day. If you can day trade, maybe that'd be better, or just look for other symbols that do have better moves. Overall, I think these are the earnings we have this week. We have, I guess, on Monday, nothing huge. Some, we have Riot, BBB, some AI. Tuesday we have Target. After close we have CrowdStrike that people might look at. After close on Wednesday we have AVGO. Keep an eye on that. On after close Thursday we have Costco, so keep an eye on that as well. And then for your calendar, big events, mainly Monday we have PMI. This week we have NFP on Friday, so we might see some consolidation maybe Thursday, or even before it. Let's see what we see this week. Keep an eye on those red folder events. But yeah, hope everyone has a great and successful week. And maybe after 80 years from now, we break out of this range. Hopefully, we finally break out of it. But yeah, have a great week, everyone. Thanks.